Abdullateef Grillo, the investment research analyst at Meristem Securities Limited, is joining me right now virtually. Hello, Abdullateef, and thank you for joining us.
Good morning, Nancy. Thanks for having me.
Now, let's get started. I don't know about you, but I'm unhappy. I know there's a moderation in inflation rates. I'm unhappy, and I can also say for many Nigerians are upset. Consumers are worried. Farmers are not also happy. Perhaps they're also confused because you see that farmers pay harvest allowances, farmer header clashes, and all of that. Where I'm really driving to is the inflation data that we got from the NBS. Moderation, 17.01% in August from 17.38%. Speak to me about what you think, your thoughts.
Yeah, so that's a good one. So the MBS released the consumer price index reports for the month of August yesterday, and they reported an inflation rate of 17.01% for the month of August. And that was like a 0.37 basis point decline from what we had in the prior months. Like you said, you are not happy, I'm not happy. A lot of people are not happy with where we are with the inflation rate presently. But what we witnessed in the month of August is quite similar to what we have seen for a while now. I think that's the fifth consecutive month that we are having a deceleration in the inflation rates. That means that the rate of inflation compared to the price increase compared while we are looking at it compared to last year, and the price increase in the previous month compared to the comparable period for in the last year too has reduced. So this doesn't necessarily mean that the price of these goods have reduced rather, but that the rate of increase is not as much as it used to be. So we are having a deceleration, or the pace at which the inflation rate is increasing is not as much as it used to be in the previous month. So to put more context to this, you might want to look at like the month-on-month increase, the month-on-month inflation rates. So looking at the headline index month-on-month, there was still a 1.02% increase in the headline index. In the food, even in the food and core indices, they also recorded 1.06 and 0.77% increase in the food and core indices respectively. So what this means is that compared to last month, things are more expensive. But looking back at the increase compared to last year, the increase that we are witnessing is not as much as we used to witness in the previous month. So to like understand, to looking at some of the things that might have been that are responsible for this, or what is it attributable to, because we are still seeing this price increase, but it's not as much. So we're looking at some things like the base effects, from looking at where we were with inflation in the previous period. So inflation as at August 2020 was already high. So now coming to August 2021, the comparable period for August 2021 is August 2020. So when we are now comparing it to that period that was already high, the base effects period, what they call the base effects period, is not going to make that increase very, very much again. So the base in August 2020, inflation rate was already at about 13.22%, with food inflation at 16% already. So looking at that is responsible. Also, there have been, while we are not happy, a lot of people are not happy with what we are saying. We are saying that there's a deceleration in the rate of inflation, but a lot of people don't really think the market is saying the same thing as what these figures are saying. But we'll also want to look at the things from the supply side. There has been like an expansion in supply, looking at the growth figures we witnessed and other things like that. There has been expansion in supply that is trying to play catch up to meet the demand for now. That is also reducing the pressure on prices and other things like this. The governments have also been trying to tackle insecurity in the food producing region. So the things like supply chain bottlenecks and other factors like that have all come together to make up for this deceleration that we are witnessing in the rate of inflation.
Okay, let's talk about the NPC that The meeting has started today. I believe the meeting will be underway right now at the central bank headquarters. Do you think that the MPC, at least over the last 1 year or so, has left or allowed inflation to blow hot for the sake of jobs and pro-growth, for the sake of jobs and for growth?
Yeah, so looking at the MPC, so the mandate of the MPC have like their objective, they have things that they are also looking to achieve. And one of these things is price stability, they have exchange rate stability and economic growth. So when the committee itself is always in a dilemma because of some of the tools that they use to regulate them to try to improve some of these matrices might actually backfire and come back to them on by like worsening another one of these metrics. So looking at where we're coming from, Nigeria was in a recession as at Q3 2020. That wasn't really a good one. The MPC was not okay with that. So looking at that, they had to like prioritize, and they were definitely in a dilemma of either favoring their progress stance or taking a less accommodative stance, maybe by increasing the rate in order to tackle something like inflation. But what to ask ourselves is that the MPC not favoring its progress stance by maybe increasing the rates or tampering with other parameters there. Will this, while this will like definitely impact the growth negatively, it's very likely to impact growth negatively. Will it have that effect they want on inflation? So the kind of inflation we are seeing in Nigeria is not really demand driven. It's due to more structural factors, which the MPC itself has attested to in some of its previous meetings. So that case is there for it, that even if it's going to like increase rates in order to like in order to combat inflation, this increasing rates, will it really be combating the inflation? Is it going to have any effect on the inflation? Because this is just going to like reduce the credit to the private sector and other things that won't be favorable for the growth we are trying to achieve. Even as at like the last quarter of last year, the first quarter of this year, the growth numbers we're seeing were not still strong enough. So the MPC still had to favor that progress stance, because the type of inflation we're seeing wasn't solely something that the monetary policy that the monetary side could tackle. So it was more like structural issues. A lot of things had to be put in place by the fiscal side and all of that for also actually see this inflation to decline. So now the MPC, say for instance, the MPC has still kept rate at 11.5%, still favoring its progress stance. But because we are starting to see some improvements in supply and like ease of some of the other factors that have been pressuring the prices in that space, the inflation has started to decelerate itself, even without the MPC necessarily having to hike the rates.
Let's still stick with MPC, and you know the two-day policy meeting starts today. Tomorrow we hope to hear from the CBN's MPC, and I'm wondering if the MPC will have the stomach right now to tamper with rates a bit, since you know from the facts from the NBS that inflation is moderating. So do you think that the MPC will stomach and say, okay guys, we're seeing inflation trending downwards, you know, we can tamper with rates a bit? Or perhaps you think that they are still in the wait and see mood. Hold it to, let's wait and see, that perhaps what we've been doing over the months have been working, we've been seeing the moderation, so let's just hold our fire, we shouldn't press the accelerator.
Yes, so like I said, the monetary policy committee is usually in a dilemma, because some of the parameters they might want to use to improve, like some of the metrics they are trying to improve, will actually have a negative impact on the other, like increasing rates, for example. So looking at what has been playing out in the economy of recent, we have seen the Q1 GDP figures, we have seen GDP figures. Well, the growth is there, but not as strong as the MPC would want it to be. So for inflation on the other hand, like I said earlier, the MPC increasing rates will not necessarily mean that we are going to see a decrease in that, will not necessarily translate to a decline in the inflation rate. So for now, the the for now, I still believe the MPC is still going to stick with its pro-growth stance because it has more reason to do that to further support growth. It has a growth, the CBN has a growth target for the end of the year. So in order to achieve that, we have to see like stronger growth figures in the third and fourth quarters of the year. So the committee will most likely continue to favor its pro-growth stance, as even increasing the rates might not have that desired impact on the inflation, on the inflationary pressures we are seeing. Because the inflation is not much of demand driven. It's not like there's too much of money in circulation that's chasing too few goods, but it's more of structural factors. We have seen supply side factors like there was difficulties supplying some regions at some point. Then there was all of that too. So these factors have to be tackled first if we are going to see it. If we are going to see a reasonable decline in the rate of inflation and not just hiking of the rate.
Okay, let's talk about the structural bottlenecks which you've raised, because like you've said, it's not demand driven, and perhaps this inflation that we're seeing is not caused by the monetary side. It's not as if there's so much money in the system. It's driven by structural issues such as insecurity caused by kidnappings. We know that farmers are being kidnapped now. Like I said earlier, farmers can't go to their farms. If they are to go to their farms, to go harvest produce, they pay harvest allowance. We've also seen structural issues such as upward FX adjustment. We've also seen structural issues such as port congestion, definitely. That impacts what we're seeing in the country. And what am I leaving out? Okay, the borders, yes. The border closure that we saw in 2019, it was opened in 2020. Do you think that, how do we address these structural issues? Let's take them one by one. I'll come back to the issue of border closure later.
Okay, like you said, there has been a lot of insecurity issues, a lot of kidnapping, banditry, and all of that, especially in the food producing region, like the northern region of the country. So, like that will have to be tackled first if you are going to see improvements in this. So, like luckily enough, some states government are also working on that. They are also working on solving the insecurity issues in the state and all of that. So these structural bottlenecks are going to be, and also for like if you look at the type of inflation we have, so the inflation is actually, we have the food index and the core index. So the food index is actually more elevated than the core index part of the inflation. And some of these where, like I mentioned, the food producing region is majorly the northern region of the country, and that's where we are seeing a lot of this insecurity, banditry, and kidnapping, and all of this stuff. So that has even like stopped from farmers from going to the farms, leading to like supply shortages and all of that. Also, there's also like some imported components in some of the, like possibly some intermediate products that go into producing some other food items or some imported food items themselves. And like not all of these people can get FX from maybe the INE window, so some of them result to the getting FX from parallel market rate. So the activity in that space also impacts the prices of some of the food items that we see. So these issues will have to be tackled. Not all of them can actually be addressed by the monetary authorities, really, for like the insecurity and all of that. That will fall more under the purview of the fiscal authorities. So we have to see stronger security and more infrastructural development in the nation for us to be able to further moderation, stability, or decline in the price of food item to where we are coming from.
Out of all the structural issues which you've mentioned, which one do you think is most threatening?
Is most
threatening. Out of all these structural issues, bottlenecks which we have, that is not monetary policy or is not monetarily cost, so to speak. It's fundamental, it's structural. Out of all these fundamental issues, which is most threatening?
But they are all not good. They are all very bad for us generally. But then looking at the spike we have seen in the insecurity issues in recent time, that is like very alarming, and the impact it has had also, the impact it has had also on inflation, and the trickle effect of that on the other key macro variables is not a small one. So for the insecurity, we have seen like spiraling cases of alarming cases of insecurity in recent times. So that itself is not a good one.
Let's talk a bit about the border closure, which I mentioned earlier. Border was closed in 2019, reopened in 2020, August 2019, reopened in December 2020, if I'm not mistaken, or January 2021. Do you think that the effects of the border closure and the border reopening, that we've been able to leave it out? That's leaving out that effect. I hope you understand where my line of questioning is going.
Sorry, can you come again?
Now, what I'm asking is the border closure, do you think that the border was closed in 2019, reopened, and now the border is still open? But do you think that the effects that we've seen, at least in the past 2 years or so, is still there from the border side that is dovetailing into the inflation data that we're seeing?
Yeah, so the border was closed in 2019, and then the border was reopened again, and that didn't have like a huge impact, or the impact a lot of people thought it was going to have on the inflation, on inflationary pressures. Because looking at when even looking at like the exchange rate as at when the border was closed and when the border was open. So as at that time already, there was a depreciation of the currency, other factors that gone into it, the heightened insecurity. So the benefits we would have gotten from the reopening of the border was already more than offset other by other negative factors that we were seeing as at the time that the border was reopened. So that didn't really let us like get the dividends of even reopening the border, which people have been clamoring for and thought was going to really help improve the price levels and all of that.
Now, let's interrogate further the price of food in August. The NBS released that food inflation is trending downwards, but still in the 20s. Though, you know, it was 21% in July, now it's 20.3% in August. And if we take a look at the food, yes, if we take a look at the various classes of foods that driving this increase, we see bread, we see coffee, we see meats, we see tea. What else again is there? I saw my team put the card on the screen earlier, cereals, milk. And in fact, I did interview the executive secretary of the Association of Master Bakers and Caterers earlier this week. He did tell me here on the show that the association will be back on a strike on September 23 if nothing has been done, if they are not listening to them. Why? Because the price of wheat and the price of everything is going up. If you take a look at the loaf of bread now, you get that for about 600, 650, 700. I don't know how much bread Agege is now, Agege bread in Lagos where you are, you know, but we know in those days you can buy Agege bread for like 50 naira. With 100 naira, you will eat comfortably, you know, but these days, no. So where I'm really driving at is, can we take a look at those classes of foods that are really driving this increase? I can see it here on the wall: oil and fats, milk, cheese and egg, bread, cereals, food products, meats, coffee and coal. Thank you guys for doing that. So let's really dissect some of those, you know, foods that you're seeing there. Those are really like staples that Nigerians eat. Over to you, Abdullateef.
Yeah, thank you. So, like, for the increase in the prices of food, like we saw a deceleration in inflation too, but presently we are in the harvest season, so that would have also impacted that deceleration that we saw. So, looking at the increase in price of food, like you said, the Association of Bread Makers wanted to go on strike because they have also been complaining about the prices of that had been skyrocketing, more than 100% increase from the beginning of the year. So some of these products, what like fits into some of these products is actually imported products. like they depend on flour, sugar, and some other things like that. So they are actually imported products, and the FX rates also affect some of these products. So looking at other ones, we saw like so like some of the things that we actually really saw increase are not very correlated with they are not very correlated with the harvest season. So we might have seen like that increase will not be very pronounced on other items that would definitely be harvested during the season. And even the harvest season mostly was like Q3, so not all the harvests will have started by August. So some other harvests might start by September, and that's too fitting.
Let's now talk about the purchasing power, of course, the purchasing power of Nigerians. Let's talk about, you're seeing that inflation, though is moderating, but inflation is still high in the 17% range. And many Nigerians, because of this inflation, income is not increasing. And we're also seeing, you use more naira to purchase fewer things. A sachet of water is 10 naira. In fact, the one that even surprised me the most, puff puff that with 50 naira before you can, one puff, 5 naira, isn't it? So with 50 naira, you can get 10, and like, that's breakfast for some people, but one puff now is going for 50 naira. So if you have 200 naira, it's just 4, so it's, how should Nigerians really handle this, And that is why when they see data like this, the inflation is trending downwards, they cannot reconcile the fact that these numbers are decreasing, but I do not have so much money in my pocket. And even the naira that I have can't buy me many things.
Yeah, so on the purchasing power of people, so like we have to understand the relationship between or what purchasing power means, like what's the value we can get for our money, and how is this related to inflation in the first place. So when we are saying that there's an increase in inflation, prices are prices are getting higher, and so definitely impact what people can buy with the money they have. Say, for instance, someone that earns 100 naira, that has a disposable income of 100 naira, for example, and could use 20 naira of the 100 naira to buy bread, and then the bread becomes 30 naira. So now he's using 30 naira to buy the bread, and he has 70 naira to buy all of that things. That has negatively impacted his purchasing power. So that has like caused a reduction or a decline in the purchasing power of the person. So while also looking at this, I think it is like necessary to understand that what we are witnessing is not a decline in inflation. Prices are still increasing. So and as long as price continues to increase, the purchasing power is going to continue to decline. So another thing is that the kind of economy we are in Nigeria, we are in like a low income economy, and about a bulk of our income of the income we earn, or a bulk of our disposable income is actually channeled to the consumption of foodstuff. And that's why also looking at the index basket for the inflation, the food carries like a large portion of that, because most of the people, what we do primarily is we are able to afford those necessary products, those food products. So what we buy mostly is food, and we have seen the price of this food skyrocket. So what that does to the purchasing power of individuals is that it brings it down. They are not able to buy as much as they used to. So like I was saying, that the inflation is not demand driven necessarily, that it's not like people have too much money to throw around, which is chasing too little goods. But then people must survive, so they have to really use this money. Even if the prices go up, it's a necessity for them. They have to buy it, and this would actually impact on other things that they consume that are not necessities rather. So when they have spent a bulk of their money already consuming food, which price continues to increase, they are spending more and more on consuming food. They have less to save. They have less to use for other things. So the increase, the rate of inflation we are seeing presently, the high rate of inflation we are witnessing presently is not a good one for individual purchasing power, because what's that the effect that inflation has on purchasing power is to bring down the purchasing power of people.
You know, what you said, and we saw MBS report sometimes in, was it 2018 or 2019, that did say that Nigerians spend majority, more than 50% of what does Nigerians,
56%
yes,
of income
56% on
of
food.
the income.
So if you earn 1,000 naira, as at then, you'll be spending 560 naira on food, just food alone. So between 560 and the balance is what you now spread across board. Now let's go over to.
And that also okay.
Okay, no, go ahead.
Yeah, I was going to say that also depends on the income level of the individuals.
Yeah. I think that's a smart one you just said. That
So,
also depends on the income level.
Yeah, okay. So it depends on what income level they also fall under, because there are some people that even the food they can't afford. They spend like more than 100% of their money
On
their
food.
their income on food, because they even have to take borrowings to spend on food. And there are people that spend. So it is actually skewed towards the people with the lower income. So while balancing it, that was what make it like 56% that on average people spend 56% of their income on food.
I like that dimension which you also brought in, and from that expenditure report, consumption expenditure report we saw from the NBS, it also showed that people in Lagos, Lagosians spend not so much as the other people on food. I hope you understand what I'm saying, and I hope you can still remember that data. It was, I think, in 2019 or so. Okay, so the cards that viewers are seeing right now are on states, and let's talk about states. I don't know why KOGI state is always coming up on top in terms of the states with the highest inflation rates. You know, year-on-year food inflation, rather. We're seeing KOGI, Bauchi, Oyo, Bayelsa, Rivers, Kwara. Bayelsa, Rivers, Kwara is slowest rise in inflation, but that does not mean those states are not inflationary environments, so to speak. All times inflation on a month-on-month basis was highest in Cross River, Zamfara, Akwa Ibom. Slowest rise recorded in Rivers, Kaduna, and Ebonyi. Abdullateef, unwrap those numbers for me.
Yeah, so what this means, what we'll be able to deduce from this mostly is that looking at it generally, we'll find more states in the food producing region would what's the word now? So like looking at it generally, like most states in the food producing region would normally have would normally spend like less of their, because this the rate of inflation or the rates we spend of food items in states is not equal. So the states that fall in the food producing region would normally spend residents of those states would normally spend less of their disposable income on food items, because food will be relatively cheaper in those states. So now transporting those food to other states, like there have been challenges to transporting food to other states, and even transport costs and other logistic costs will also feed into it before it gets into other states. So we might would like find that most states that are not very like don't fall in that region, rather states that don't fall in that region, that don't produce food as much, would normally have an higher inflation rate than the states that the food producing states, because of the logistic cost fits into it. Even normally, even before the pricing the logistic cost into it, it's just very rational to send it at a lower cost at the states in which it is produced. And also we'll find that some of the residents of those states also, they do farming for their own consumption. So people residents in those regions would generally spend less on food items. Also looking at the inflation data, you'd find that rural inflation is usually less than urban inflation. So regions in which will have like that dominated more with rural regions would generally have a lower inflation rate than the regions with higher inflation, with higher, will have a lower inflation rate than the other regions, rather. Sorry.
Now, let's put this whole thing into perspectives. We've talked about these numbers. We've tried to analyze them. Even every month, we do that here on the show whenever the MBS releases those data. But the question right now is that how do households ameliorate the impact of inflation? What can we do now, to lessen the impact of inflation as a Nigerian? What should we do? 12 kg of gas is going for over 7,000 naira. 12 kg, yes. I used to buy for 3,500 or 3,000 some months ago. So as Nigerians, the cocoa of the matter now is that what can I do to lessen this impact of inflation on me and my family?
So looking at the way inflation actually impacts. So we already talked about inflation and purchasing power. It's really affecting every ordinary Nigerian. So that's there's been like a reduction in what we can buy with our money and all of that, and everybody's really feeling it. So there's the bulk of this, like we said, the inflation is structural. Bulk of this will be coming from the fiscal side, really. Not much that people can do. But what will also help to reduce what we are seeing in inflation will be when we have more output. So when more people are into production of what we generally consume, when we are having more output of goods and services, we will see a reduction on the pressure of pressure on what we currently have. So if we can have that, possibly the inflation wouldn't be as heightened as we have it now.
I like that aspect which you brought in terms of we need to be a more producing country, because it seems that we are more, that's what it is, not it seems. We are more of a consumption economy. The president wants to do new borrowing now. Debt stock 35 trillion. I know they would also argue that there's the FX component in it. But I think that the conversation we should be having right now is that how do we get in more FX into the country to lift the naira? The naira is 562 naira at yesterday at the parallel markets. I&E window 412. So as we end the program, do you think that especially the fiscal authorities and perhaps a bit of the monetary policy side, do you think that government is even listening to us at all? Do you think that government is really, sitting down and doing the hard work? Or we are just talking. I'm like, let Nigerians continue to talk. When they talk tired, they stop.
Yes, so from the actions of the government in recent times, some of the things we have seen, both the fiscal and monetary authorities during recent time, is kind of clear that they are also concerned. They also share our concerns about the FX liquidity in the system and the rates, the exchange rates we are having currently. So there's a proposed Euro bond issuance. They also got an SDR, which the government hopes will impact the rate of FX or improve what we have presently. But some of these things people argue is still quite temporary, because we'll still need more. And what for us to even get a more permanent answer to the question, to this a more permanent solution to this problem, it still borders around producing more and improving our supply. So when we can improve supply and generate more FX, it's going to that would be a more permanent answer to a more permanent solution to the problem of FX we are currently facing in the country, as against getting a loan or an easy allocation, because that would only sustain us for the meantime. But then I believe, looking at the actions of both the fiscal and monetary authorities in the recent time, like I said, the Euro bond issuance and all of that, the authorities are also concerned about the illiquidity of FX and where exchange rate is at present.
Thank you very much, Abdullateef, for your perspectives today. Thank you for joining us. Have a wonderful day.
Thank you for having me.
All right, I'll be speaking with Abdullateef Grillo, who is an investment research analyst at Meristem Securities Limited. We've been talking about the impact of inflation in the country, headline inflation. We've also tried as much as possible to dissect it. That's the August data that was released by the MBS. Thank you all for being a part of the program today. Be the best you can be the change you want to see. Please join us again tomorrow, same time on this channel. God willing, I will be here. Nancy Naji is my name. Bye now.